Well, here we are again, the illustrious and effervescent Kyle Green and myself talking mortgages. Well, the government went out and surprised the heck out of us on September 16, just a short day ago, yesterday. And some of those changes are far-reaching. Some of them don't mean that much. But in order to clarify our thinking, Kyle, we'll welcome you. What are all the, in broad strokes, the changes, and then we'll dig into them.
Yeah, so there really were three changes. The first one is they're raising the default insurance limit from $1 million purchase price or property value up to 1.5 million. This is the first time that they've changed this since 2012, so it's been a long time coming. And then the second change that they did is really just splitting up the policy that they just came out with that launched in August, which was that if you're a first-time buyer buying brand new, that you could get a 30-year amortization for an insured mortgage instead of 25 years. And what they've effectively done is they've split that off into two different policies, which is effectively that if you are a first-time buyer or if you're buying brand new, that you can get up to a 30-year amortization now. So basically making it easier to qualify and easier to be affordable if you're either a first-time buyer or if you're buying brand new property.
Yeah, and then they brought on a buyer's Bible and a vendor's Bible and all of those things. Tell me, first of all, the word default limit. What exactly? Why is it called default limit?
Yeah. So really, the benefit for the borrower of this whole policy is that you're able to buy with less than 20% down. That's really the benefit. It came out actually years and years ago in the 50s, and it was initially intended, CMHC, to help returning war veterans buy with less than, at the time, 25% down. And then they said, okay, well, that's not really fair that we are only supplying this to war veterans. Let's just do this across the board to all Canadians. But the key is you're paying an insurance premium that gets added to your mortgage, and the insurance premium is for the lender's benefit. And so now, if you default on the home, the lender forecloses and they lose money, then the lender's reimbursed by the insurer. So the whole point of having a 20 or 25% down minimum, that was enough of a cushion that most lenders wouldn't lose money in the event of a default. And of course, not always true, but in general, they would be covered off. So lenders didn't want to allow for less than that. This is where the insurers cover that difference in the event the bank actually loses money on the situation. So,
well, the difference, though, is like I know somebody compared it in the United States. There was the mortgage-backed securities, and this is somewhat like the mortgage-backed securities. The only thing in the United States, it wasn't backed by anything. Whereas in Canada, it's backed by the government, or actually by you and me, in the end. Come to think of it, we're helping the banks be more safe. But I mean, it is amazing, though, that it's 20% down or less. And let's say I'm a first-time buyer, and let's say I do put down, give me a number, say the minimum I can put down is about 125,000, is that right?
Yeah, so and this is another rule the government changed a few years ago. There's so many complicated little nuances here, but technically you can put as little as 5% down on the first 500,000, and then the remainder is 10% down.
Right.
So what ends up happening is if you buy up all the way up to 1.5 million, then you would have to put $125,000 down. So 25 grand on the first 500 grand of value, and then $100,000 on the other $1 million of value to get up to 1.5.
So now you have a $1,375,000 mortgage. Plus you have to pay an insurance premium as well.
Correct. Yeah.
Ooh, you got to be a doctor, and a good doctor, or a good lawyer to make those monthly payments. What's that, about $8,000, $9,000?
It's about $8,000, assuming that you take a fixed rate mortgage, and it'll probably be closer to $9,000 if you take a variable rate mortgage as of today anyway. So not a cheap mortgage. And in fact, the qualifications, the lender's using a rate that's even higher than that to qualify you. So, realistically, in order to qualify for a mortgage of, effectively a little over 1.4 million, when you add on the insurance premium that gets tacked on, you need a pretty high income. You need something around the $280,000 income level in order to qualify, maybe 300,000.
So it's not all of a sudden any John, Dick, and Harry can go buy $1.5 million house with 5% down. I mean, that's kind of scary in a way.
Yeah, exactly.
I mean, it's a lot of money. Now again, this idea of on August 1, they said we can have a 30-year mortgage, but we limit it to new people, new buyers buying new houses. But this new one is now allows me as an old buyer, an older buyer, or repeat buyer is the better word, right? If I already have a house now, buy another house, then I cannot get the 30-year mortgage unless I buy a new house. So if I buy a new house or build one, then I can get a 30-year mortgage.
Yeah.
Whereas for the new buyer, the newbie, he can get new or old 30 and get a 30-year mortgage. Is that about right?
Yeah. Yeah.
So isn't that discriminating against the older buyer? What's the purpose for the government to put that in?
Well, Ozzie, you know, let's not get too political now, but it's definitely a vote situation. I think the Liberals are looking at the polls and wondering, how can we increase our younger voting cohort, and first-time buyers are definitely one of them, right? So
well, that's true. And I guess if you're a repeat buyer, the idea is, well, if I'm a builder, I might go and say, okay, I'm better off to build this house, build a new house, attract more buyers because they can get a 30-year mortgage. That makes a whole bunch of assumption that A, the 30-year mortgage is desirable, B, the repeat buyers, that's what he wants, and so on. But why complicate all of it? Wouldn't it have been better to simply say the August 1 rule now has changed, you can buy any house? Well, I find that strange.
100%. Yeah, it's just a weird thing where they're isolating very specific segments of the marketplace, and I mean, this has been a thing that the government has done a lot in the last 8 years probably. It continues to say, okay, little patchwork, and it's actually gets really complicated. Accountants, lawyers, mortgage brokers, realtors, etc. A lot of people that especially are in the real estate industry in some way, shape, or form are just, it gets complicated. It's so hard to remember all of the policies and
to be a realtor today, you have to have your head examined. If you want to be a manager of realtors, like the rules, and the penalties you can get if one of your agents does something or your salesman. I mean, it has become much more intricate to understand it all. And sometimes I don't get the reasons. I doubt very much that the government always knows what the reasons are. I noticed today in September 17, the BC government allowed 22 municipalities an extension on what they had said they had to do by June 30th, right? Because it's just become too onerous for small communities to come up with plans and places like West Van or that have all mountains. Anyways, the point is, these are new rules. I think there are some good parts about it, isn't it? I mean, some of the idea behind it is not a bad idea because, as you said, we've had this 1 million limit forever.
Yeah, 100%. Well, there's a couple of things to look at. So let's talk about some numbers. So changing the maximum amortization. So if you're buying as a first-time buyer or if you're buying brand new, moving it from 25 years to 30 years increases borrowing power by about 7%. And so I looked at a borrower's making about $100,000 a year household income with 5% down. They would max out at about a $420,000 purchase price, and now they can go up to about $450,000. And for those that are budget conscious, so now maybe not maxing out based off of their qualifying, but maybe maxing out on their budget, it decreases payments by about 9%. And so the payments on that $420,000 purchase price, if that's what they were initially going to be looking at, would go from about $2,283 a month to $2,082 a month. So basically a decrease of about $200.
Yeah, that could make the difference. If you can have happy months with going out for dinner once in a while. So there are some benefits to doing that. And let's face it, we don't have the 30-year mortgage in the state. You're not stuck with the rate anyways. We have 5-year term. By the time everybody says, well, you're paying $50,000 more because of those 5 years, you don't get there. The key is that you survive now and that you do well and live life as large as you can. And that lower payment will do that for you. Now, the government also is forcing the municipal, or rather the provinces, to do certain things. In fact, they have this fund, they call it the Canada Housing Infrastructure Fund, $5 billion, and they will lend it to those provinces that toe the line, like do the things that the government wants it to do. Like I know in Ontario that they voted not to go for sixplexes on any lot. So the government says, okay, you can't have any money on the $5 billion fund. So they're renegotiating that now. But the idea is that what they want to protect Canadians from renovictions and blind bidding, although nobody really understands what exactly blind bidding means in every province. They want to standardize lease agreements. And interesting, they want to make sales price history available on title searches. So that would be, I wasn't aware that that isn't available. I mean, at the land registry, they would have to have the history of how often that house sold. It was registered each time. So to make it available, I guess, to be not really sure, the devil is in the details, right? But that's part of the idea. I don't think that's necessarily a bad idea. It gives you, although it might feel you like crying if you spend $1.5 million and you see down the road somebody paid $120,000 for that house. How much history do you want? But
Yeah.
But then they brought in a renter's bill of rights and a home buyer's bill of rights. Do you know anything about that?
We're getting a little bit more information on that as of now. So it's kind of interesting because, it seems like the governments continually give more and more information, more and more feedback that they really want to protect renters in these types of situations. Especially in British Columbia and Ontario, we have such restrictive tenancy laws, and it's only gotten worse here. I mean, obviously, just not too long ago, we came out with some tenancy laws that were very restrictive, and all of a sudden they had to backpedal a little bit because they realized that it actually negatively impacted the ability to get mortgage financing because of the timelines that they came out with. So still investigating that, to be frank. The last day has been really trying to get a handle on these new CMHC policies, and there's still a lot of gaps and holes in them. In fact, when we called CMHC yesterday to get some feedback on the new stuff that passed through, CMHC reps had zero idea that this even happened. Like they literally didn't even know that this was happening. Yeah. So they said, honestly, we're trying to figure this out too. Yeah. So government has a habit of just forcing down the policy, and now we're figuring out things like, does this, if it comes into effect December 15th, is that the contract date or is that the completion date? How long will it take the lenders to get their systems up and running? It's a pretty crazy situation.
Well, it is crazy. It's like Ronald Reagan says, the most scared phrase in the world is, here, I'm from the government, I'm here to help, and then everybody runs for cover, because no, we don't need your help, because you don't know yourself exactly what the outcome is. It seems like you pointed it out earlier that maybe there's an election coming in BC, and then there's one coming in Ontario, in federally, and then we have one in the United States. And my God, with all the elections and the uncertainty, maybe government is all of a sudden in BC and in Canada come up with these new, wonderful new things that we will do for you if you just re-elect us, even though we were in power 8 years. Now we're going to actually do what we promised to do, right? But so the point is the Bill of Rights for the renters and the home buyers. What about the Bill of Rights for the landlords? We have stories now from landlords, a good tenant from hell who understands the legislation can be, a real terrible person to you and change your life. All you wanted to do is have a regular income in your retirement, and you made it possible for that person to rent the house so some of those bills, they worry me because they have sometimes a slightly leaning towards an individual. I notice a lot of realtors are telling me now they don't want to take a listing where there's a tenant in it. Because how am I going to get my buyer, who now wants to move, usually within a month, to wait till February before he can move in? Because it's 3 months plus 3 weeks of dispute, and we know how long that can drag on. And so, you need to literally have a very unique situation where the buyer says, yeah, I will move. I don't have to move till February. Okay. Very difficult. Or realtor saying, okay, if I have to show 9 houses and 4 of them are tenanted, I just won't show them, right? Because it's just the problems that government has created by these rules just make it very difficult. And we had one particular situation in our group where the owner wanted to move into the house, but only into such time as his girls, going to university, and when they're moving out in 8 months, then he was going to move out. Well, he better not move out in 8 months, because if he doesn't stay there at least 12 months after he's given tenants notice, he has to stay there 12 months, no rhyme or reason, no exception, or he's facing a 12 months penalty. So if you have $3,000 a month rent, you have to pay $36,000 to a tenant who's long gone. Now who thinks these things up? Yeah, and it's your house, right? And you spend a fortune, like we just said, maybe $1.5 million with 5% down. Well, it's a crazy world. Is there anything else in there that we have to worry about?
Worry about? No. I mean, I'm going to talk a little bit about some of the unique cases that we can find. So as a mortgage broker, I'm always trying to figure out, okay, what are the benefits to borrowers when these types of policies come out? One benefit is that they're called stated income policies. So if you're self-employed and trying to buy a property, there are ways that you can state your income at a higher number than what you take and pay yourself. And in general, these stated income policies, it's a bit easier to get a mortgage done through these than it is through banks and whatnot if it's not insured. Now, what I found is, and I literally have a client that have been, has been dealing with this right now. The $1 million cap on the insurance was a problem because everything he liked was 1.1. And if he went just a little bit higher on the purchase price over $1 million, he would have to go from A lending to B lending, and then the rates are higher, the fees are higher, et cetera. So now this new policy will allow him to qualify, and so self-employed borrowers looking for homes between 1 and 1.5 will now find that there's a little bit more options, which is good. Another thing that comes up too is, especially in the mortgage broker channel, there's insured mortgages which get the best rate, and there's also what's called insurable mortgages. So even if you have 20% down or more, if your mortgage is insurable, which means it's 25-year amortization, you haven't refinanced, the property value is underneath the threshold, which is going up to 1.5 now, and it's not a single unit rental, so it can be 2 or more unit rental or your owner occupied home. Then better rates are available for that insured bucket. And so we find that clients that are coming for renewal or purchasing a property even with 20% down may find that they now have better mortgage options available to them. And in addition to that, the rental property policy is interesting here because for a long time, we weren't finding that we were offering insured or insurable mortgages on rental properties, even if it was 2 or more units, because the amortization was 25 years maximum. Where now, if you're buying brand new and it's 2 or more units, you can get a 30-year amortization through the mortgage.
Which you couldn't before, yeah.
Which you couldn't before, which is favorable in most cases. And in general, insurable mortgages get better interest rates. So there are some little nuances here where some better financing terms. And as a mortgage broker, I will say that it does level the playing field a little bit, because if insurable mortgages get better interest rates, then what happens is, the $1 million cap is really relevant in Vancouver, Toronto, and to a lesser extent, some of the other smaller major urban centers in Canada. So we're finding that all of a sudden, some of our non-bank lenders that the mortgage brokers have access to now have better rates available to them, as soon as December 15th than they would have had otherwise, which is good.
Yeah, we should make the point. It's only available from December 15 on. And like you said, doesn't mean the contract date or the closing date. But I think, I must admit, I was at first not enamored. I said, how is that going to help? But as you point out, it does make a difference in many situations. There's another thing that the insured mortgage holders can now switch lenders at renewal without being subject to another mortgage stress test. So sometimes maybe I got a stress test, I finally got the mortgage, but my bank really doesn't love me. We talked about it at the last video that maybe the banker has you now, he doesn't have to do anything to keep you. Well, maybe I now can go to the next bank and saying, here I am, I'm over at that bank, and I don't have to take another stress test. That should be a little something. Yeah.
Exactly. Yeah, it'll help with qualifications for sure. And I felt like that was becoming more of a challenge for a little while. And now that rates are starting to come back down again, we're finding less borrowers are in that spot where they don't quite qualify. But it definitely does help, and it takes some of the pressure off when you come up for renewal, feeling like you have to renew with your current lender. This does open up more options for you to be able to shop around and find a new lender that can offer you a good rate. Yeah,
and so any time when there's competition, it helps. Now, tomorrow we have in the United States the big meeting. Are we going to see 0.25% down, 0.5%? I saw that the Democratic Party, led by Ms. Pelosi, made an impassioned plea to the Federal Reserve Chairman to lower it by 0.75%. So I'm not quite sure that he's going to do that. Whatever it's going to do, it will have an impact. So if the rates are in general terms on a downward trend, we talked about it last time, what's the impact on the buyer? What do you hear? Does it mean maybe I should wait and get that much lower rate? I mean, let's say I'm on a variable rate right now for 3 years, and I could get one. What would be the difference if the prime goes well below 5%, or whether the rates are around, as the banks say, around 3%? What would be the difference? Is it 2%?
Yeah, so I mean, there's a couple of factors here. So first of all, the expectations the Bank of Canada will drop about 1.25% to 1.5% over the next 12
Right.
months. And then the bond market, which impacts the fixed rate pricing, is expected to drop about 0.5%. So not quite as much, and that's because the fixed rates are much lower than the variable rates right now. So it means that that gap will just shrink to being about neutral. So we are expecting that even if you like fixed rate mortgages, it may make sense to take a variable and then lock it into a fixed rate in 6 or 12 months once the fixed rates have kind of come down and settled. But of course, too, keep in mind different variable products have different payment,
Penalties.
right? Well, that's another thing too. But the payments themselves, most lenders are what's called a VERM, a variable mortgage rate, and it means that the mortgage payment does not change as the prime rate changes. So you don't have any payment relief as the rates go down, but there are a few lenders that do have products where as the rate goes down, the payments will go down, and that's becoming the more popular product, whereas when rates are going up, everybody wanted the fixed payment option, right? So that's something that you want to keep in mind. And then, as you said too, if interest rates drop considerably and quickly, the fixed rate penalties can jump up very, very quickly. And so you might find that a penalty to break a fixed rate mortgage may become much more expensive than a variable, because variable is always 3 months interest, whereas a fixed rate is 3 months interest or an interest rate differential, and that can be much more expensive.
Right. And that is that's why you need a mortgage broker. You know, I mean, I plug you happily, but even if I wasn't plugging you, you have to get a mortgage broker, and you have to have some, particularly as an investor, you have to have and understand the nuances and the different lenders. You can take it literally an application saying, well, this Ozzie shouldn't go to the major banks, you know, we should go over there, or he should go to a B lender or whatever, or nobody will lend to him if it's Ozzie. But the point is that that's who you need. Whereas if you go to one financial institution, they have one goal, and it's to sell you on their product, right? You have the opportunity to give these choices. And unlike in the United States, where a mortgage will cost you 2 to 3%, here the brokers are being paid by the financial institution, so you don't have to worry about that. So no question about it. It's an interesting world that we're living in, and the government seems to be intent on making it more interesting for us.
I know, I agree. Yeah.
Well, thank you very much, Kyle, for doing this follow-up. I shall put it up. I had a lot of calls this afternoon, so I'm glad you had the time to do this.
Of course.
Take care, and all the best to you.
Thanks, Ozzie.